This video I will explain understanding credit scores. Credit score is nothing but your financial report card. What is a credit score? A credit score is a number that shows how good or bad you are at handling the borrowed money, loans, credit cards, etc. Usually the score ranges between 300 and 900 in many countries like India or 300 and 850 in places like the USA. A higher score means you are more trustworthy to banks and lenders. A lower score means banks may see you as a risky. In short, your credit score is like a financial report card. Why credit score is important? First point is loan approval. A good score increases your chances of getting a loan or a credit card. Second point is lower interest rates. With a high score, you may pay less interest on loans. Third point is faster approvals. Banks trust you more, so they process your request quicker. Fourth point is bigger loans. A strong score lets you borrow more money if needed. Now we will see what affects your credit score. Your score is calculated from your financial behavior. What are the key factors? The first one is payment history. Do you pay your bills, EMI, and credit card dues on time? The second one is credit utilization. How much of your available credit limit do you use? Using less than 30% is ideal. Third one is length of credit history. The longer you have been using credit responsibly, the better. Fourth one is types of credit. Having a mix of credit is better than just one type. Mix of credit means like a small loan plus a credit card. Fifth one is new credit inquiries. Applying for too many loans or credit cards in a short time can reduce your score. Now we will see how to improve your credit score fast. First way is pay bills on time. Always pay your credit card bills, EMIs, and loan installments before the due date. Even one late payment can lower your score. Second way is keep credit usage low. If your credit card has a limit of 100,000 rupees or $1,000, try to use less than 30,000 rupees or less than $300 in a month. This shows you can manage credit wisely. Third way is do not close your old accounts. The longer your credit history, the better. Keep your oldest credit card or loan account active if possible. Fourth way is avoid too many loans at once. If you apply for multiple loans or cards in a short time, banks may think you are desperate for money. This can lower your score. Fifth way is check your credit report regularly. Sometimes there may be mistakes in your report, like a loan shown as unpaid even if you cleared it. Checking and fixing errors can quickly improve your score. What is a good credit score? 750 and above is excellent. Easiest to get loans at low interest. 650 to 749 is good. You can still get loans, but not always at the best rates. 550 to 649 is average. Loan approvals may be harder and interest rates will be higher. Below 550 is poor. Very difficult to get credit. What are the key takeaways? In short, a credit score is a number that shows how well you manage borrowed money. To improve it fast, pay bills on time, use less credit, keep old accounts open, don't take too many new loans, check your credit report for mistakes.